Thank you so much for sharing your day with me. And I mean it. I am JB Bryan, the President and Chief Investment Officer of JB Bryan Financial Group, the home of Afro Economics. It's high noon on Wednesday, April 23rd, 2025. What an exciting time to be alive. We are so blessed to be here. I really appreciate this time with you. Please don't hesitate to make comments along the way. It always helps to enhance this educational experience. We're going to talk about the Federal Reserve today. Like, there's so much stuff online for entertainment that I am impressed with you that you're taking this time out to actually get empowerment, get education, get insight, just get away from all of that, and in hopes that this actually will be entertaining, right? Just because it's empowerment and we're getting information and we're growing. It's impossible for me even to know at this point in my life how fantastic it is to commit to sharing information, at least once a week for us to have this. And then on Fridays, I have the members only meetings so that we can meet as a group and do a more intimate, personal exchange. So even if you sign up for Afro Economics and the free membership, you are able to participate in the members only meetings on Fridays. It gives us time to Zoom, so it's a little bit closer. I love for you to turn on your cameras and we talk to each other. I always try to pick a topic and then we just grow right on past that, right, Tracy? We grow past the topic and continue um to move forward, and just having the exchange. Like I put on my Facebook wall today, when you sit with winners, everything changes. The conversation is different. And it's so true. Like, we're winners. Well, I'm winners. I'm a winner. Tracy, you're a winner. We're winners because we are committed to enhancing and improving our life. Also, a thought that came to mind because I saw, someone put up a post, and then the post had like, what they saw as God, beating up a politician in the boxing ring. And I said, if not for the grace of God, like, you know, that God doesn't beat us up like that, no matter who you are. And may we find peace in that, in knowing that God is graceful. He's so good. His mercy endured forever. But it just, it made me think that like when we do go into this boxing ring called life, do we feel alone? Do we feel like we're alone? Do we feel like that we're actually up against God? Because God is not our enemy. God is not our opponent. God is actually within us. So if anything, you go into a boxing ring of life, bring God with you. God bring, put him in your glove, have him in your heart, have him in everything that we're doing, because negativity, that's the enemy, that's the opponent. Doubt, that's the opponent. Lack of knowledge, that's our opponent. You know, the but all that is good, love and positivity and empowerment, that's you keep that on your team. Keep God on your team. And I don't know, I think somebody needed to hear that today. I needed to share that. But that don't get confused about who you keep on your team. Stay with winners. And we talked about that briefly on Friday in the members only as well. There was a interview with Jimmy Jam, and he was talking about how when he was working with Prince, that he wouldn't be who he is today if he didn't surround himself with Prince, that he didn't have the opportunity to work with Prince. Like when you work with people that are shooting for excellence, that carry God around inside them, that really helps you become a better person. I said to my trainer this morning, because I'm 30 years older than her, and I said, I hope that 30 years from today, for you, you can find a trainer that is as good as you are, you know? Because I'm so thankful for having her to push me to another level. And I hope that, I love when my clients, tell me that I've done something that has helped them stretch, go farther, persevere. Hey, shit, I'm celebrating just for the firm. I started in financial services, before I started my firm, but for the so I've been financially empowering our community for over 30 years, thank God. And to be able to look at you and how well you have done. I was thinking about, like, when one of my clients that I met when I was at the investment firm, and then when I, came out independently, she's still with the firm. She's retiring now. She's retiring. And I spoke into faith of what she was going to be able to accomplish. And I think she is still shocked that we did it, that God used me to help her. God used me to help her reach this point of retirement and have the assets that we were shooting for, and more, and more. And it is possible. But when you get into that boxing ring called life, you got to remember who to keep in your corner. Keep your corner fully equipped with God. And that the more winners you have in your corner, and when I say winners, I mean people with a positive attitude, people who want to learn more every day. People are constantly teaching you something, bringing you something. And if they're not teaching you something, they're not taking. Keep them in your corner. I want to stay in your corner. I want you to be in my corner. Indeed. So, when we're talking about the Federal Reserve, I wanted to share something because, I want to share something. I thought, I think because a lot of times we don't get to see someone who looks like us talk about these topics, and I'm thankful. I want to share. I want to share this. I want to share. That you will hear it. But I'm gonna just a little bit of this video before I go into my opinion and everything. So I'm gonna share. I'm hoping I'll play this. Can you see that? I know I didn't go up there. No. I'm gonna go back to it. So hi. I'm gonna make sure. Tell me that you can hear it, that you can see this video that I'm sharing, because it's not where it should be.
Ron Paul's skepticism of the Fed, and I'm going to quote you. This isn't in Basic Economics, but a recent column.
I don't think you
quote,
can.
For most of the history of this country, there was no Federal Reserve System.
Peace right back at you. I think that's what shalom means. Let me make sure I'm trying to share this. Let me see.
But
See if it does it this time.
Was established, close quote.
Can you hear it?
If you could.
Yeah, you could probably hear the video I'm trying to share.
Would you abolish the
Fed? You can
Fed?
see it,
Yes.
though.
You would.
Yes, I
see
mean,
it?
for the reasons I just gave you, the history. There's no, the Fed represented wonderful hopes, but we've had so many programs
Y'all
that
are
represented
communicating with
wonderful
me.
hopes that ended in disaster. I don't doubt that someone who is sufficiently scholarly could come up with examples of where the Federal Reserve made things better. But the question is, overall, what was it supposed to do? It was supposed to do not only prevent bank failures, it was supposed to prevent huge changes in the money supply, in particular, great deflations.
Right.
The greatest
All right.
deflation in American history
Now what
occurred
I should
under
do
the
is
Federal
start it
Reserve
over.
System.
All right, you want to start it over? This
overall
is
represented wonderful
Thomas
hopes.
Sowell.
The Fed represented
Federal Reserve System.
Is thinking.
And it's
Lots of questioners want to know whether
2010
you share
asking his
Congressman Ron Paul's skepticism of the Fed. And I'm going to quote you. This isn't in Basic Economics, but a recent column.
Right.
Quote, for most of the history of this country, there was no Federal Reserve System. There you go, that dirty trick of bringing in history.
Ah, yes.
There was no Federal Reserve System, which was established in 1914 to prevent bank failures. But bank failures in the 1930s exceeded anything ever seen before the Fed was established. Close quote. If we could make you dictator, would you abolish the Fed?
Yes.
You would.
Yes, I mean, for the reasons I just gave, the history. There's no, the Fed represented wonderful hopes, but we've had so many programs that represented wonderful hopes that ended in disaster. I don't doubt that someone who is sufficiently scholarly could come up with examples of where the Federal Reserve made things better. But the question is, overall, what was it supposed to do? It was supposed to do not only prevent bank failures, it was supposed to prevent huge changes in the money supply, in particular, great deflations.
Right.
The greatest deflation in American history occurred under the Federal Reserve System. There was a crisis in 1907. J.P. Morgan, the original J.P. Morgan, called the other bankers into a room, supposedly locked the doors, and said, "We got to do something, or we're going to all collapse." And they did something, and they didn't all collapse. But the progressives were shocked that one man could come in and take command of the situation, and especially someone who wasn't even in the government.
Right. So what would you do? You'd move us back to the gold standard, or you'd let banks issue their own currencies the way they did up through the Civil War? Say I could.
Well, they weren't doing any of those things as the time the Federal Reserve was created. We were on the gold standard, though. But whether we're on or off the gold standard, that's another whole set of arguments. There's no evidence that I can see that over this vast period of time that the Federal Reserve has existed, that things on the whole have been better. The great post-World War II inflation was fed by the Federal Reserve doing exactly what they're planning to do now, namely buying up the bonds issued by the Treasury.
But don't you have, I have to say, I wasn't expecting your answer to run in this direction, so I don't have follow-up questions prepared, or you may actually have, I may have.
Brother got him, he got him, he got him. The bottom line is he was sharing that he doesn't believe, and that was 14 years ago. And he said, like, what's the need for the Federal Reserve? What is it doing? How is it helping? What is it actually contributing, to society? And as we really think about it, I want to make sure that I point out some key things that most of us have no idea, that the Federal Reserve does absolutely whatever it wants to do. No, people talk a lot about, the president having too much power and things like that. Well, as we should know now, the president has little to no power, none. I guess all that they can do is kind of pardon people, criminals, at the end of their administration. Like, yeah, they got pardon power for their family members and stuff. But as far as the Federal Reserve is where the power is. The Federal Reserve has the power and is not restricted by the government, not by the president. It takes an act of Congress to stop them from doing anything. So that would take literally forever. Like, you couldn't, like right now, if we, wanted, as we can tell, that the increase in the interest rates by the Federal Reserve has harmed the average to low income American. It has hurt. It has hurt the majority of everyone that we know. The Federal Reserve over the last years has, in its attempt to do whatever it does to help the banks that finance it, because the Federal Reserve, as we know it, is actually owned by the member banks. So we're saying that the Federal Reserve regulates the banks that actually, no, the Federal Reserve feeds the banks. The banks in the region of the Federal Reserve regional banks, like we have a Federal Reserve regional bank in Richmond, Virginia. So the banks join the Federal Reserve so that they can have access to the cash, because the Federal Reserve, prints money, basically. They don't even have to print money anymore. They just make money, because all of our money is like digitized now. So they have this loaning capacity, the Fed funds rate. So we talk about all the time, their control over the interest rates. And then they have the money that the banks need. When the banks run short of the reserve that is required by the federal government, the government sets up, or the Federal Reserve sets up, because we should not call it a part of the government. It is a private agency. Then there is a board of governors for the Federal Reserve that is a government agency, the board of governors. But the board of governors is still not controlled by the president. The board of governors get to stay on there for 14 years. And if they become the chairman, like Jerome Powell is, they get to stay for like 20 years. They get extra time. Does that make any sense at all? It doesn't have, like, we don't get to vote. This is why it's so important for us as citizens of the United States to understand that these people that we're sending to Congress really matter. Because Congress has the ability, because Congress created, all the way back to like Thomas Jefferson. Thomas Jefferson said we do not need to have a central banking system, because he had maybe the foresight, the forevision to see that they could just get in there and only answer to the banks, answer to the people with the money, giving the people, the individuals, the voters, absolutely no power. They can absolutely crumble us with high interest rates and have the banks as happy as they want to be. Because that's who they answer to. And then when the Federal Reserve makes money and they pay out dividends, because the member banks get ownership in the regional banks. And it is hard as heck to find out who are the regional banks, what banks are the highest lenders, highest owner member banks, which banks own the most shares of the Federal Reserve regional banks. Last I did find that it was actually Citibank. It was like over 40%. It was almost 50% of all the shares were held by this Citibank. Now, don't you think that Congress should have some sort of requirement that there will be no financial institution that could actually have that much control? And did you know that the actual people in Congress that work on the governing board of the Federal Reserve governing board don't have to answer? So they are saying that that's how a lot of Congress people actually became multimillionaires, because they sat on the governing board of the Federal Reserve and got information, got on that congressional committee and got inside information that they do not consider inside information. So they're saying like Nancy Pelosi, a lot of that went on, and was connected to her name. Elizabeth Warren, connected to her name, like that. It is. They supported debt of Treasury. Hi, Mr. Durrett. Yeah, I know you're making a good point. I know it's just hard to get it in on here, but thank you. Amen. And so I want to make sure that I go through the notes of what I wanted to make sure. So the Federal Reserve System is not like owned by individual investors. No, it is actually structured to be both public and private. And it has 12 Federal Reserve banks that are structured like private corporations. And that's where the banks buy shares of those private corporations. The 12 Federal Reserve banks, if they're in that region, they can buy shares of that Federal Reserve Bank. So then they also have the board of governors that I was talking about. That is actually the public part. And the independent government agency called the Board of Governors reports to Congress. And the Board of Governors is appointed by the president and confirmed by the Senate. But the way they make sure that the president doesn't have any control is by actually giving them that 14-year term. that goes way past any president. So they get in there that can stay for the 14, and for Jerome Powell, the 20 years, And I think that actually Jerome Powell was first selected by Trump, the during the first, but no, actually, I think, and he is known to be a Republican, but I think he was selected by Obama. And the and but we would have to see like who actually, but you can pick the president if a board opening comes available, the president gets to pick who is going to, or be involved in it, and then the Senate confirms it. So you can't really say like, oh, it's all just that president's fault, because the president can just say, hey, I like that one, but it's up to Congress, the Senate, not the House. It looks like it's just the Senate that has to oversee that Federal Reserve governing board. So that is like a key reason why you would see some politicians would want to be in the Senate if they want to become very, very wealthy, because then they could get with the Federal Reserve governing board, they could get more financial information and they can make more personal moves that wouldn't be considered insider information or insider trading. Isn't that something? Because it is so negligently regulated and from a compliance perspective, which is a big part of my dissertation is about regulation and compliance in the financial service industry. And a lot of, investors just take it, for granted. You don't really see that regulation is important. And especially as you see now with the lack of regulation over the Federal Reserve, I believe that it had a lot to do with why that the Biden administration wasn't given much respect, because the interest rates that as they rose, they really gave the economy a bad look. And that is why you see Trump may taking a more aggressive stance, like you're the problem, but Jerome Powell is not really the problem. It's the way that he is controlled is the problem. Because first of all, why would the banks that actually own Jerome? He doesn't answer to the president. He answers to those member banks that are actually owning those shares that control those regional banks, that's all they are. And then they actually pay out dividends. They pay out dividends to the banks from the Federal Reserve. They got a system all set up that we don't know about. And then I want to show you their website. When you go to the Federal Reserve website, and then once you understand, you can look at the website and see how much they don't tell you. Like they don't share. It's like, so why wouldn't they put up who the shareholders are of all these regional banks? Why wouldn't they put that, on their website? But they didn't. Let me get this site. Let's see where I'll put it. But I don't know. But I'm gonna get you there too. I'm gonna get there, and I'm not even gonna give up. I'm gonna take my time, and I'm gonna find out where I wanted to show you. Well, that was good. That's all I had to do was type that in, because I have been there, and it was in the memory. So I'm gonna go back here, and I'm gonna go back here, and this is called the Federal Reserve Explained. So check this out. So this is federalreserve.gov, and then you go who we are, right? And you come down or scroll down. The Federal Reserve Bank is the U.S. central bank created in the Federal Reserve Act of 1913 to establish a monetary system that could respond effectively to stresses in the banking system. Stresses in the banking system. They didn't say stresses to people, stresses for us, stresses, here's consumers, what's way over here, it's way over here. You can tell where the money is when you see. Like you go to my website, like I'm talking to you because that's how I eat. I talk to individual investors. They don't eat from us. They don't care how bad the interest rates are. They do not care. Because what? The member banks make more money the higher the interest rates are. You think, you think they make more money off deposits or they make more money off your credit card? Of course, they make more money off your credit card. These credit card rates are outrageous. Even if your savings rate went from 2% to 5%, it doesn't cancel out all of these Americans who have trillions collectively is higher American debt than ever in history. And you're talking about, oh, we have to keep these rates up because we're concerned about inflation when fuel prices are down extremely. Can't even blame it on egg prices, but they still have these interest rates high. You know what I'm saying? And then try to act like, oh, it has something to do with, the stock market and they're not going to help the stock market. What are you talking about? You are keeping those interest rates up because the people you answer to benefit from everybody paying more for everything they finance. And when you decide to, you can just write another check, put yourself into even more debt. There's no excess coming. There's no excess coming out from the Federal Reserve. They're sending their excess to those banks that bought the stocks in their dividends. Isn't that something? They pay out dividends for the banks that bought ownership into their banks. And then we're supposed to think that this is a privately held entity. This is their website. Okay. And as a who, this is federalreserve.gov. Also, I feel like is misleading. You could have Federal Reserve Governing Board.gov, but literally, how do they get a .gov when they know that you are not a government agency? Y'all banks are private and then owned by other banks. But yeah, like the brother Thomas, the economist Thomas Sowell was saying 14 years ago that the Federal Reserve is a cancer. And then the guy said, well, what do we replace it with? He said, well, if you cut a cancer out, what would you replace the cancer with? I said, I know that's right, brother. I know that's right. They'll probably never say, you know what? This economist, Thomas Sowell, said years ago that this is a ridiculous idea and we need to get rid of it because you're feeding everybody else except for the taxpayers. The Federal Reserve feeds everybody else except for the taxpayer. But yet it'll say it's designed to control interest rates. I get that because you want to make sure the banks make money and to help with employment. Yeah, you're not. And then to, do whatever else they'll say that they're designed to do, but they're not doing anything. They even have the Community Reinvestment Act. Banks are supposed to make sure that a certain amount of funding is gone that goes to the community where the exact bank is located. So what did banks start doing? Leaving our neighborhoods. And why? Because they can. And what did they start doing? Under the same Community Reinvestment Act, Whole Foods can come into the hood and get the loan. But how many loans they actually do for the businesses that it was supposed to be meant for the businesses and for the taxpayers who live in the community around that bank? Community Reinvestment Act never put in it that it would help Black people. Never. It put in low income. Then why do so many corporations get to benefit from it? Because the bank said so. And why does the bank get to say so? Because they are the members and they own it and they own the shares. And it is very, very, very darn hard to find out which are banks that dominate the ownership of these regional banks. Those are the ones. But I do know where that at least one report said, I haven't seen it written yet, that Citibank, because I kept looking. You can Google and search and see what bank actually owns the most of the Federal Reserve regional banks. What is the biggest shareholder? We can find that out on anything else that's public. Why is that so hard to find? And they said that the guy out of New York actually shared some information and in the report that I saw, and that's how they got the information that Citibank owns so much. But I think if that was just for the New York region, though, it could actually have 40% of all the other regions too. Again, is it designed? Do we need it? Is it helping us? I don't see it. Is it hurting us? Yes, it is. Is there a lack of consciousness on taxpayers when it comes to the Federal Reserve? Yes, it is. This is a huge challenge. It needs to be addressed, politically. How do we help protect ourselves as individual investors? Avoid debt. Debt is not our friend. Debt is not your friend. If you have to finance something, do it as quickly and efficiently as possible. You want to go into business, consider finding investors, doing private equity partnerships, private equity ownership, issuing bonds to investors. Find out about alternative things to avoid these high interest rates, and the banks basically owning you for the rest of your life. But it's, I feel that a lot of this where you see the Federal Reserve chair, has they mention a lot that they're not touching interest rates because of the thought that tariffs might happen or the impact that tariffs might have. That's not their job. That's not their job. It's not their job. Like it is not the Federal Reserve's job to always just look out for their banks and what might happen, or the people that are paying the loans back to their banks and what might happen, and to look at things only from a big corporate perspective. That's not the purpose of what the Federal Reserve was created. But you'll see very little addressing of what their responsibility is to the individual saver, the individual depositor, the individual person going into debt. There's not talk of that. You even hear the Jerome Powell. He's not talking about that. This is crushing people's futures, and the interest rates are just extremely high. And a lot of people that do need to purchase homes can't afford to purchase a home because the mortgage rates are so high. It's just not talking about that, because this has helped a lot of banks to be able to get more money. And so many hidden reasons that we'll have no idea why they're crushing so many little Americans right now. Why there is no emphasis on that employment, okay, but what about wages? What about wages? Who is addressing that? Who is talking about that? When we adjust wages for inflation, people are not making as much as they were 20 years ago. You cannot buy as much with the money that, your salary may have gone up, but when you adjust it for inflation, your salary has not gone up. That's for the general public. So it has to be like deeper. I feel like if we're going to have a Federal Reserve, then they need to be making more of an emphasis on the impact of interest rates and their moves and money supply on the individual voter. But the way it was structured, they don't have to answer to voters. But yet you say that you're a government, you're part of the government, or the governing board that has the influence of Congress. You don't care either. We don't have anybody talking about wages. So you're only thinking about inflation, but you're not thinking about the fact that even if you decide that, okay, these fuel prices are down, we don't have inflation anymore, this and that, we're still going to have a problem because wages haven't been adjusted. And we do not have a federal commitment to a livable wage as the minimum wage for the United States of America. We have a huge problem. I don't see the benefit. If you can get rid of a Department of Education, then certainly you can get rid of a Federal Reserve that's putting most of its emphasis, and you could keep the Consumer Service Bureau open for consumer protection and help actual savers and investors and workers and voters. They had to create that agency that they're trying to close down for the consumer protection, office. They're trying to close it down now, but the Federal Reserve is not doing anything to help consumers that are victims of the financial agencies that actually, even that bureau gets too much money from the entities that they're supposed to be protecting us from. You follow the money. How can they fully protect you if they're being financed by the actual companies that you're suing and saying that they're exploiting you? So the Federal Reserve is not designed to look out for us as individual savers, investors, workers. It's just not designed for that. And it's not doing that. So can it be eliminated? Yes, in my opinion. It's gone until you all do something that actually help us. Is getting rid of it actually, helping Trump? No. But it is good that the Trump administration is trying to teach us and encourage us to realize that as individual voters, we have power. We need to assume it again. We need to assume it again and stop voting in people who could care less about our welfare. There is actually nothing that we can say is being done for our individual welfare. And yes, I feel that if the Federal Reserve lowered interest rates like they said they were, it would have helped keep the Biden administration look more positively upon. And it would have actually helped right now people live. No, but that's not their job. No, that's what they'll say. No, it's not their job. So what is your job? Just to make sure that the banks are happy. That's it. Basically, that's what we're letting them get away with. So make sure, please talk to me if you feel that you have too much debt, you're unhappy with the interest rates that you're paying. If you have an investment portfolio, you're not sure what's going on, how to set up the proper allocation. I am a registered investment advisor. I own my registered investment advisory firm. I am licensed, one of the few that you are going to actually see on here that's actually regulated, and I'm licensed, and I have to do continuing ed requirements and everything. I also have all of my insurance licenses as well. Anything dealing with finance and financial stuff, reach out to me, 1-844 JB Also, please consider clicking like on this video. If there's anything that I said that has empowered you, I'm in school and school charges me. I don't even monetize my video. But at school, they charge me for every class that I take. I'm finishing my PhD, God willing. Thank you, God. I'm saying it in the most positive way that I can. I only have one more class left, and then it'll be all writing my dissertation about many of these things that we are just talking about, compliance and regulation and in the financial service industry. And that I am here for you. And all I ask is that you do a click or share both. Is it too much to ask for both? I've been doing this 30 years. I never asked for a click or a like or a share. Never gave a cash app. Don't, you know what I mean? I don't ask for much. But, if I die, I want my daughter to see that my mother was actually working and she did something and people liked it. And even if you don't like it, please click like, some good things will happen for you because you will have made me happy. You put a good thing in the world and good comes back. But know that I want you to be successful, that I want to see you. I want to see it work for you. I want everything. I want you to see you get your heart's desire. And if there's things that are impeding us, I want to make sure that we address it. So so this week, look back if you're getting in here late, make sure you start back from the beginning. How you doing? Hard Man Headquarters. There, hello back to you. There, make sure you start from the beginning on, Federal Reserve and what it is. And before you leave, I want to make sure, because I always like do a whole dissertation of notes and then I don't should tell you about it. So we talked about the Federal Reserve has 12 regional reserve banks that are structured like private corporations. And that's where member banks are required to hold stock in the Federal Reserve Bank in their district. And their stocks can't be transferred, but they do get dividends. Isn't that something? These banks that buy into the Federal Reserve banks get dividends from those banks. The Federal Reserve System is considered independent from the government, meaning it doesn't need approval from the president or Congress for its monetary policy decisions. It doesn't need approval. You talking about power? It has it. The Federal Reserve's operations are funded primarily from interest earned on what they buy. Generally, what they're buying is a lot of government bonds. Their assets pay them, and that's their major place of funding. The Federal Reserve is subject to oversight by Congress, and the Congress can review their activities and alter what they want the Federal Reserve to do by statute. So, meaning there'll have to be an act of Congress for us to do what I'm saying, that I wanted to look out for the voters more. Begin to have an emphasis on the best interest of the actual person making the deposits in these banks, not just look out for the banks. No, it's important. It started back in 1913. Isn't that something? And it's seen a lot of major financial crises since then. So it has not been as successful in preventing the Great Depression. No, it still happened. The 2008 financial crisis, no, it still happened. The COVID-19 pandemic, no, it still happened. As a board of governors, 7 members appointed by the president and confirmed by the Senate. They serve 14-year terms and are responsible for guiding the monetary policy and overseeing the system. That's the board of governors. Then you have the Federal Reserve Banks, 12 regional banks, serve their specific districts across the country, act as operational arms of the system, provide services to banks and government agencies. And then you have the Federal Open Market Committee, which is called the FOMC. And it includes, the FOMC includes the Board of Governors. So those Board of Governors have those 7 members appointed by the bank, by the president and confirmed by the Senate. And they serve 14 years, so there's no one president that's actually stacking up the board. And then it includes the board, the FOMC includes the Board of Governors and the regional bank presidents. And the regional bank presidents change quite often as well. So the monetary policy is called open market operations, and they buy and sell government treasury bonds, treasury bills, and they adjust the federal funds rate. That's what they say when we cut short-term interest rates, they're talking about those federal funds rates. And they determine the Federal Reserve monetary policy, that FOMC. They actually set up the reserve requirements, the minimum amount banks must hold in reserve to make sure, like, so if all of a sudden people want everything out, all the money out of a particular bank, and then the bank doesn't have enough reserve for that, then they do what? They go to the Federal Reserve. And that's one of the benefits of them being in the Federal Reserve. But that has nothing to do with the FDIC insurance that you have on your account. And securities investors, you have SIPC, Security Investor Protection Corporation. That's for brokerage accounts, which is much bigger than the FDIC, 250,000. But that's a whole nother discussion. But thank you. Please reach out. This could go on and on and on. Y'all know I appreciate you. But I just wanted to talk about, like, do we need it? Is the Federal Reserve wrong? Yes, they are. Can you tell if a bank is about to fail? I guess if you looked at it as an investor, yeah. If it was publicly traded, you could, because you would see the audit, you would see the financials. They would have to do the earnings reports for a publicly traded bank. There might be some people that actually have privately held, like it'd be a local bank or something, and it's privately held, private like family owned or something like that. They might not know when it's falling apart, but as long as it has that FDIC on that window and on your account statement, then the person is good. But as far as like an investor into a bank that you're worried about the bank actually, failing, then you would have to be, actually tracking what's going on with the bank. And that's why they have the reserve requirement. They would probably have some sort of requirement that must go out on the regional banks. Like, so if it was a bank that was in the Virginia area, the Federal Reserve regional bank, if they had a bank that's in that region that could not keep up their reserve requirement, you really still wouldn't know about it, really, because they could just borrow the money from the Federal Reserve. And it being private, no, it doesn't. Those banks are publicly held by and owned by the banks in the region that own the shares of it. So they don't have to really answer to you. So they should have, a regulation that would say to the investor, but it would still be a delay on that. It would be hard for you to know before. It would be really hard for an investor to know before it happened. That's why diversification is important. Diversification is important so that if you're holding an individual investment like that, it should not represent a big part of your portfolio, so that it would actually, hugely harm the investor. But a person might work there and not know any better and have like 80% of their 401k in their company bank. They'd be exposed to a lot more risk if the bank went under as a shareholder. But they should talk to, someone like me. And even if they work there, I would immediately go into, we need to set up your allocation for your work plan. And if they were like giving you shares of their company as a match, that's cool. But that doesn't mean that you have to be putting all your money into it. He said Congress will never get rid of the Federal Reserve. The No, actually, the Federal Reserve will never get rid of the Federal Reserve. But there's very little benefit to Congress. The banks, well, the reason that Congress wouldn't get rid of the Federal Reserve is because where does Congress get most of their fundraising money from? Who is running all the PACs? Financial service industry, we're huge. It's huge. Huge. A financial service industry is huge. I would like to see, like of the $1.5 billion that Ms. Harris actually was able to raise, of that, what percentage of that, and they don't have to tell you because it will come through a PAC. The PACs, they can hide what is coming, but I know a lot of that is corporate money coming from those entities that would not have wanted that financial consumer financial bureau that is now in the courts trying to stay open. How many banks were worried about that happening? No, we're worried about like which way the election was going to go, so they had to go on both sides. But if they actually knew it was going to happen, then if they really felt like, I don't think they really felt, I just feel like a lot of people missed that call. Because if they really, then you would think that Trump would have raised more money because they would have wanted that. But banks were running it. They were just tired of having to spend that much money on that because, that particular bureau, it financed itself from the money that was collecting from all those financial service firms, which is probably why they kept it separate from the Federal Reserve. But I feel like if they keep it, hopefully they will put it into the Federal Reserve, or if they do get rid of it, that is a very important part. Customers have to be protected. We have to have regulation. And I'm saying that as someone in the business, but I think that compliance and regulation is one of the most beautiful things that we have as Americans. You saw Usain Bolt, he was in Jamaica. They don't have the regulation so he lost millions of dollars with this investment firm in Jamaica because they don't have the same regulation. The stuff that happened to him in America would not happen. But he had it in a firm in his country. Their whole regulation is different. We have so many protections that are different, but the Federal Reserve is not designed to protect us. But the bureau that is being closed down right now is designed to protect us. But there's just so much for us to learn. So much for me to learn. I mean, I'm just shocked at some of the things that I discovered. The lack of interest in the individual investor and saver by the Federal Reserve and in its whole overwhelming theme was shocking to me. We're just not there. We're just not there. So we need to have that. So you should be encouraging whoever you vote for that, hey, we need to keep the Consumer Protection Bureau, and I'm not saying it correctly, right? But that is now in the court that you need to tell your congressperson it needs to stay open. It is in our best interest. It is in your best interest as a voter. I got almost $700 from this company that I had done business with that got sued from that Consumer Protection Bureau. Just came in the mail one day and said, we found out they're crooks, like you said. Here's your money back. Years ago, at least 10 years ago. And that's something, just got the check. They didn't forget it. That's a blessing. You got to have protection like that. You all have a wonderful day. I look forward to seeing y'all Friday. I appreciate you all. Thank you, Mr. Barber. Thank you, Jenny. Thank you, Ms. Wilkerson. Good to see you. Thank you, headquarters. And yeah, I appreciate you all. Y'all have a great day. I'm JB Bryan, President and Chief Investment Officer of JB Bryan Financial Group, a registered investment advisory firm and the home of Afro Economics, established 1995. You got $1,500 back, Ms. Wilkerson. I was like, I'm talking about. Yeah, girl, we can go out and be generous. Since you got more back than me, you can just give me, you know what I'm saying? You can just help me level up. Give me some of that 500. Give me up to 1,000. You keep 1,200. I'll be at 1,000. We'll have a great. Yep. Everybody be happy. I can see you looking funny now, like that. Y'all take care. Stay strong, stay empowered, get that information, and I look forward to serving you going forward. Really, that's right. Yes, yes. Take care. Bye bye.